What happens when you get a double Brett thrust? How many percentage points does the market tend to put on after such an event? Hello, ladies and gentlemen, and welcome back to The Daily Show, where we're discussing earnings this season and, of course, what's going on with the major news. Disney did well. Amazon is possibly doing better with some healthcare changes, and the US 500 remains at the key resistance zone. This is exactly where we expect market shenanigans to go on from Wall Street. We've also seen injections continue to come in from the Federal Reserve and central banks around the world, and that's helping to support this rally right now. But in the face of adversity, what do we see? Demand destruction and weakness in some of the sectors is leaning into this idea that maybe not everything is so healthy right now. But one thing's for sure, treasuries are doing much better. Even though they didn't move too much on yields, we've seen incredible strength coming out of treasuries off what we thought was an incredible volume bottom. What happens over the next 20 days might surprise you. Join us as we cover stocks, commodities, and cryptos together right now. Well, welcome back, everybody, to The Daily Show, where we cover the macro, leading indicators, and, of course, the hottest charts. If you like anything to do with markets, remember to subscribe and smash that like button. So across the board, it was a bit mixed. In fact, it was actually mostly a down session again across most of the major stocks. However, it was the big techs that kept it up, and that's why we have got two markets. Here is a great chart showing you the differences this year. I'm just going to rattle off a couple of numbers before we get into some of the big stats and, of course, the key levels. Year-to-date 2023 returns. NASDAQ up 40%, S&P 500 up 15%, Dow up 4.4%, equal weighted market only up 0.4%. And then we've got the Russell 2000, the small caps, the kind of lifeblood of the economy moving forward, negative 1.7%. If you asked anybody, we'd have a 40% up Q year and a negative 1% Russell, you would say, that's not possible. Maybe that's not going to happen, but it did. And that's where we find ourselves at this stage. Now, I know a lot of you probably know that, but we'll get into why that's important moving forward, because we will need the Russell this time to show us that it is moving. And that's probably where the greatest opportunity lies, maybe for 2024. 30-year bond yield, how has the performance been? Well, we haven't actually seen a switch of trend, but notice this. Performance from the 6th to the 26th of November tends to be very clear, and it's usually down. That is good for treasuries, and it's helping to bring treasuries back up, and they just broke through a key resistance that we've been looking at for some time. Another thing that's really helping the Treasury story is central banks cutting rates at the fastest pace now since August of 2020. Now, of course, the Fed hasn't done this, and other central banks around the world, such as the Reserve Bank of Australia, are actually continuing to hike. But what we are starting to see is cracks showing and therefore cuts coming back in. Now, similar times we've seen this, what's happened? We've either gone into a really good period for stock markets, or we've actually gone into a soft or maybe even hard recession. And you're starting to see this with unemployment rates. We posted this over on our Twitter X account, links in the description down below to follow along. And it shows you the unemployment rate. Now, it's a lagging indicator, I understand that, but it shows you what happens coming into usually an official recession call. Now, we know that when we start to see unemployment rates start to hike back up, we're usually 6 months away from that big bad kind of, let's call it boogeyman that's in the markets, and that is the recession. And usually we see an uptick starting to appear after a bottoming formation, some form of kind of bottoming curve here. And that's exactly what we're seeing here in 2023, a bottoming curve. With all the revisions coming in every month, non-farm payrolls comes in, guess what? Oh, we put on less jobs than we said we did. We did put on less jobs than we said we did. That's actually starting to have a cumulative effect that's putting in that bottom. So there's a good chance that we are now around 6 months away from that official recession call. But more importantly, what that means for markets is it usually means we're seeing a bit of a rally into possibly a drop later on. We'll talk about another official recession call style indicator that tends to happen. Now, it doesn't mean the market's going to go bad, but it does mean that 2024 is going to be very exciting for traders. A lot of opportunity out there. The Fed possibly is done. Of course, we see 1 month, 3 month cycles so far, following a lot of the stats. We've talked about this several times. 6 months and 12 months later actually have positive correlations with them. So interesting. I think it's going to be a very volatile period. Now, when we get reads like that, we can also talk about where we are in terms of rate hikes and rate cuts. I think the market's been predominantly wrong on this. Obviously, they've predicted rate cuts all the way through 2023, and that hasn't happened. It's been higher for longer. And now they're predicting somewhere around the back end, really, or middle to back end of next year, getting rate cuts. I would say they're probably still wrong. Maybe it's Q1. As early as Q1, we actually start to see rate cuts from the Fed. Now, it's my guess, and it's a guess only. We'll find out whether I'm correct, or maybe somebody in the comment section is correct. Let me know when you think they're going to do a rate cut. Of course, doesn't mean you're going to get edge off that trade, but it is interesting to see. Another interesting stat, this is outside of the US, but I thought it would be a good one. So we've just seen the Hang Seng Index down 10% this year, and it's on track for 4 consecutive years of declines. Now imagine if we saw that on the S&P 500. Here's some interesting stats here from Jason, and it basically says that since 1964, we've only had one 3-year losing streak ending in 2002. When we see those types of things, here are the following 5 years: plus 35%, plus 13, plus 5, plus 34, and plus 39%. So a really significant underperformance for some time. Maybe there's some opportunity in that market if we see the right technical sessions and things. Now, we spoke about this at the start of the video, and I want to bring it in straight away here, and that is the Zweig breadth thrusts. Basically, we have a breadth thrust that came through, and we have an earlier one that's technically official at the March period, and then we've got another one here in November. Now, notice if we go through the history and we take a look at the first and the seconds, whenever we get a secondary read within that 18-month period, they tend to be more aggressive. In fact, the percentages are even stronger. So for bulls out there, they're going to be liking this type of read. I mean, a double read in a year has historically been a pretty strong indicator of strength. Here's another read on that, and here is another way of looking at it. Now, this one will skip some of the previous ones, such as the 2023 one, and that's just because it's a slightly different metric when creating it. Let's have a look at S&P 500 performance before and after daily winning streaks end. So we've just had an incredible winning streak. In fact, we're on that 7-day kind of winning streak for the S&P, and then we end it. What actually happens? Well, we actually get a slow melt up, but notice in most periods, we actually have a statistical drop from that point. So of course we see weakness, but overall a very strong melt up. Let's just read these stats here. This is basically, we've just seen 8 days up, so up 6.4%. When daily winning streak ends, more gains likely over the next 60 trading days. So again, pullbacks are more than likely going to be met by bull demand. At least that's what the stats have us believe. Russell 2000, we mentioned the small caps. This is one of the most important charts. We need to know what the small caps are doing, because 12 months later, when we get these kind of 4-day gains, strong kind of 52-week low pickups, we tend to have positivity in the Russell. We have not seen that in 2023, and we will need to see it in 2024. If the Russell doesn't come with us, that's going to show you incredible sickness. And really, I think what the Russell's waiting for is the change of yields. We need to see these higher for longer start to get cut, or at least everyone to be on board of that. And you're going to see that drive through to things like biotech in particular, which is a well-known sector that does very well off rate cuts. So that's something that we've been looking at. Small trader put call premium. This just shows you the sentiment. Obviously, last week we saw huge amounts of puts getting entered into the system. They were unfortunately wrong. Hopefully you were watching this channel and we were discussing kind of the counter to that, which was to go bullish. Now we are at a critical resistance though. So let's talk about November. What happens? Well, we tend to rally up. Okay, check mark, done. Then we tend to go sideways and down. Okay, we'll see whether that happens. That's a question mark. And then we rally hard in the back of November, which would be consistent with those 60 days after 8 days of running. Now, earnings, still some earnings to come. Of course, Disney in focus at the moment. Positive signs for that. Nice breakout of what you could argue was an accumulation structure. So we've now been patient. We've now seen a breakout. If we get pullbacks, will Disney continue to fire? It looks like it could be, and we'll look at that soon. Gold, just a reminder, the squeeze is on. Obviously, similar events. We saw a pretty large move that was over 25%. But let's talk about unusual trading activity. First up, Microsoft, late prints coming out of nowhere. Of course, they would do that. So we see Microsoft absolutely flying. If you've been watching this channel for a while, you'd know that's my favorite stock. So I've, of course, smiley face. And the reason why I like it so much is I think it's a great activator of early AI technology. And so far, so good. So yes, somebody placed some big trades and they've, of course, led on to a rally in Microsoft. Let's talk about small caps. This is why I want to bring it up here today. some big trades coming through. Out of nowhere, we get a huge trade here on the 3 times small cap bull stock market shares. So that shows you that the Russell might just be getting a little bit of juice put into it, and that's going to be really exciting if it does. Also, the Russell ETF, IWM, we all know this one, that also had a large trade come through down here. Now, it could be a sell, it's possible, but more than likely, I think there's positions starting to come into this market, looking for that rally, looking for that recovery, hopefully off the economic sentiment shifting thanks to the Fed. Let's talk about options now. 37 million versus 39.5 normal, 50% calls, 50% puts. So getting a little bit more putty than calls, which is probably what we expected. And then we move up and we see the unusual options activity. So in terms of percentage moves, there weren't any huge ones that are here on the charts. Of course, there were some negatives and some positives. Solar continuing to get beaten across the board. But I think one of the ones I'm constantly watching here is the Russell. The Russell keeps getting these puts stacked onto it. We've seen a shift there, though, where more calls are coming in. But continuous activity, 1.75. We're going to need to do a max pain on Russell soon, because I think as it creates these bases, we need to talk options. We need to look for put walls and understand whether there is actually a buyer there that's really strong, or whether it's just going to keep melting down, because it's been getting smashed for a long time. Let's talk about rotation. We continue to see home builders as the number one sector of the last 5 days. Semiconductors doing well, which is generally the best first gamma stock. We also have KRE, which is regional banks. Good to see them up there. Consumer, the American consumer, XLY doing okay. And then, of course, we have over here some defensives in the middle. Gold now lagging, metals now lagging, energy getting absolutely smashed as demand destruction is in play across at least the markets for now. Last 24 hours, interesting. Semiconductors, technology holding everything up. And you can see here GDX really getting hit, negative 3.15%. These are the kind of levels I like for GDX. And of course, I've mentioned many times that I think gold is going to do okay. But yeah, it had a massive run, so it's just getting a little pullback at this stage. Percentage of stocks above the 20 is still good. Above the 200, above the 50 is all very strong. We'll run into a lot of charts here. Skew doing okay, so we've already talked about that before. The US 2-year yield did drop off here, so you can see a new low on the US 2-year. Let's have a look at the US 10-year. So you can see a new low forming. But where I'm interested is the US 30. So we've talked about how we think there's a change of trend here in yields, and a lot of people disagree with that, which probably makes it look better when I see it on the technicals. If everyone disagrees, then I'm usually a bit happier with that. But over in here, we see a new change. So this is the change that many people were looking for in terms of alerts, a new low for the 30-year, and that's moving into 20, 30. All of them have now made their first initial trend changes. That's helping treasuries, which of course is doing well off this huge volume base. And it's nice to see it finally start to recover. One of the worst sectors or the worst areas to be in 2023 has actually put in some pretty good percentages in the recent weeks. And we've been talking about position traders, 8.34%, 35%, actually doing better than the market overall from the base. So some good stuff there, and treasuries looks like it's set to kind of might be a base here, because we've rallied through these highs. We now see pullbacks as probably being bought. And I'm going to look at some big positioning on the weekend video. So make sure to subscribe, because if we get the right positioning, it could be a sign for a really big turn in treasuries moving forward. S&P 500, as we know when we talk about this, and we'll go through the TA later, we've got central bank liquidity injecting back up in, which is helping to support the markets. It's a bit dodgy, but that's what happens. We've got US 2 versus 10-year actually not uninverting, which shows us this is the other usual recession indicator. When we uninvert, that's when we should be scared. So it doesn't sound like any recession's coming anytime soon based on non-uninversion, or that's not what's occurring. So we'll see whether that does happen. And Dow Jones Transportation Average continues to just be stuck in a zone. Same with home builders, stuck in a zone. Not really negative nor positive. Copper did fall. Copper fell back down to that trend line that we've been talking about. If copper buyers are going to come back in, around here is the correct area for copper buyers to come back in, and we'll see whether they can hold it up. We'd like to see that occur. Dollar index. Now, this one's a good trade because, of course, we saw it come back to these supports, or this supply area in here, and we've found a bit of strength into that zone. Then we've actually made a new low. So it's kind of pointing towards maybe the dollar is actually about to fall off. And I don't often talk about similar currencies or currencies in general, but it does open the case for things like the Australian dollar to actually do a little bit better. remember, I just mentioned before at the start of today's video that the RBA, the Australian Bank or Reserve Bank, they've basically done a rate hike. Now, at the same time, the Fed's talking about maybe we need to cut or hold or do whatever we're going to do. And that kind of changes the narrative. Now, if you really have a look, I was recently in America using my Australian pesos, I'm going to call them, because they weren't worth much. And basically, you can see how bad the Australian dollar has been performing. It has been horrendous for quite some time. In fact, it's trading at the below band that usually you see the Reserve Bank have a go at. So it'd be interesting to see whether they would try to get back up into those kind of high 60s, early 70s, which tends to be kind of the area that you can see is targeted over history. And when you understand the history of a currency, you can see whether you're at the bottom of their band, where they start to get more involved, or whether you're at the kind of median, which sits around in here. So are we cheap? Well, maybe, but we'll see whether we end up getting that constant rotation. Interesting point here for it. And I think a lot of technical traders will be looking around these zones. Of course, practice your own risk management, etc., etc. RSP, let's have a look at equal weighted markets. They have been dropping. So that's showing you the market internals are like a little bit sick, though we haven't really seen a huge drop in transportations or home builders. So to me, much of a muchness. Of course, I have alert set at 143.68 just so that we can see together if we do get that break. Gold actually broke down below, so no strength in gold at this stage. We can set an alert above here, above the high, 1972, to show us that gold buyers are back in. But at this stage, I'm thinking they might be weak, hopefully down into the 1920s. And then around 1920, I'd like to see some buying pressure come back into gold. So it's due a pullback. It had a massive rally on squeeze. This is totally normal and pretty much what happens every time. Let's move over to US oil. Oil continues to get absolutely smashed. I'm not buying. Obviously, I've been negative on oil or neutral negative for quite a few weeks now. And we've done some great calls together on oil. You know, we've had some exceptionally good entries and exit points. And we talked a lot about this zone. We talked a lot about this being that kind of resistance while everyone else was feeding into the narrative of everything that's going on in the world. Well, the reality is it's different to the news. So remember, if you've been belted by news, that is, you've read a narrative, you get smashed by it, and unfortunately it leads into poor trades, and you go, wow, I shouldn't have done that. Let people know in the comments down below, read those comments, guys, because basically what happens is we all fall into it. We read the news, we understand that, oh, this is scary, yet the exact opposite of what we are told or what we are kind of given. Remember, we're given limited data inputs. Price action, the way the markets are structuring up is the key. Now, we are in actually a demand zone, so we could look at structure here. Do we have any? No. Will we revisit this? Absolutely, we will in the next video, so we'll see what happens. For now, bears are in control. Tesla looks like it's kind of coiling for a breakout, doesn't it? But I'd like to see the market still fall before rallying up. So, of course, gap fill could be an interesting one, which sits around, I think, that 205 zone on Tesla. At this stage, though, still looks relatively bullish. I want to bring up Disney because, of course, it cracked this zone down here. And when we look at it on a daily, you can see here, it's got a decent build. It's cracked. It's gone up to this level. I could see it kind of weakening a little bit there. But look, it's got some momentum. This is going to be a fairly big deal for it because it's been every single month and every single pretty much day this year, it's mostly been in the negative run. And you can see why it's so important. This is a 2014, 2020, 2023 low. And this weekly or monthly is going to be really key because we have a long leg doji, and bullish at this stage. If we close above, we've just broken past and we can say, well, decision made, markets are looking better. KRE ended up having another kind of weakness session. We're looking for more weakness in financials and regional banks. And the reason why is because we'd like to see the market have a little bit of a pullback here for obvious reasons. Unfortunately, maybe too many people can see it though. Australian market actually strengthened through the trend line. So you can see here the trend line, and it's going for this supply. And that's an interesting component. Of course, Australian market, we've been following it for a little while. We are bullish on this market at this stage, and I think rightfully so. However, it's coming into a key point. So I could see why people would take profits here and even upwards of around 70, 74. And we're just looking for hopefully a pullback soon to give us better technicals. Same thing with the DAX. The DAX is being started to be shorted now by maybe a little bit too many retail. That usually means traps are coming. You can see it's building a position. We'll find out which way that breaks. CQQQ, the Chinese stocks are doing better, but no new high yet. We'll mark out a 38. If we get something like a 37.90, a 38, then I think that is a very good sign for the Chinese New Year. And let's talk Russell 2000. Now, we saw a large pickup in positions. Now, we don't know whether they're bullish or bearish, but we can kind of assume they might be bullish. Let's look at this. 20 moving average daily. 20 moving average resistance. Resistance comes down right around that area. Could that be a potential buy zone? Well, it might be. And of course, structural levels will be important, but we can see it's actually respected this zone a few times here. So because it's respected it, usually it becomes kind of like a self-fulfilling partial prophecy, and then we can build in smaller time frame stuff in terms of change of trends. If you're ever interested in how to learn the real structure of markets and understand change of trends a little bit better, check out our course, the Day Trading Masterclass, in the links in the description down below, because it will tell you so much about how to read markets so much better on any time frame, all the way up to dailies and weeklies. And it'll really change your way of perceiving positioning, because it's all about positioning. It's not necessarily about, oh, here's a system that's like a pattern or this or that. Really what it's about is, where are the big orders? How do I find them? How do I understand how they're trapping us as retail traders, and more importantly, trapping a lot of liquidity so they can build their positions? Ask yourself, they have to build $1 billion worth of position. How are they going to do it in the most efficient way using algorithms and all sorts of other trading devices? Let's take a look at the NASDAQ here. What's going on with the NASDAQ 100? Well, okay, it's back at these highs. We can see it's got a doji here on the session, and obviously it's been a massive run. Now, unfortunately, everyone's going to say, well, I have to short it. Yeah, I mean, it's at the key zone. Don't get me wrong. I like the idea of a short, but we need activation. So let's have a look at the S&P 500. Same thing, similar supply, same kind of concept. Now, what have we seen? So we've got actually a small time frame potential short in the zone that it's at right now. Does it work? Oh, it's like a 6 out of 10. So it's going to work maybe 6 out of 10 times, not all the time. I've already said on the previous videos that we really want to see a 43.46 so that we can kind of get into that 42.80 zone, 42.40 zone. That's going to be a very interesting level in the future should we actually breach this zone. You can practice patience, or you can kind of get sat with all sorts of movements ups and downs. There are some trades, though. I could see people, as I said, trying to have a go at shorting around this level with stops above the highs. 44.01, I believe, is a gap fill. So that's going to be also a bit of a risk to you. But yeah, there are some changes here, small time frame changes that are happening on the S&P 500. Will they hold through? Remember, it's been a lot of days up, but the signs are still fairly weak. Only very small, scalpy time frame, quick stuff. What about Bitcoin? Well, we said don't short a dull market, and it's dull, and it continues up. And that's really how we have to look at it. With Bitcoin targeting, a lot of people are going to say, where is the target? Where is the target? Well, obviously, it's probably just underneath 40K is the initial target. And the second target is actually about 46,000. So Bitcoin really on a runner right now. Ethereum coming behind slowly. Remember, check out your ETH-BTC ratios. We'll do that a little bit more on our weekend video, along with some max pain and along with positioning by Wall Street. But this is, it's kind of what you expect. It's a dull market, and it's kind of difficult to have a go at it just yet. But expect the unexpected in crypto. As you know, in 1 second, it can be like this. Boom, 20% down. I'll never forget live streaming to you guys a few years ago. And I think it was Polkadot or something like that. And we were watching the whole crypto market live. And in about, I'm not even kidding, maybe 30 seconds, Polkadot went from about $46 down to $16. And it was just getting crushed. And I remember that everything was exploding. And that's the problem with crypto. Sometimes that can happen. So you got to practice risk management. When things go thin, when things crash, it can get a little nasty. So practice the risk management there. For the news for the week ahead, of course, we have Fed Chair Powell talking again, and that's going to happen on Thursday, which Fed Chair Powell speaks at 2 p.m. I believe this is his main speech. That was more of an introduction. And then Friday, we have prelim UON consumer sentiment at 10 a.m. There are still some earnings, but of course, we're out of the big earnings right now. I think the read last time I checked was 70% beats. So it's been a relatively good earnings season, and that's helping to support the markets. As always, practice risk management out there, guys. Make sure to stay humble in these markets. They're too good at trapping us into our own psychological beliefs. And I wish you all the best in the upcoming sessions. Thanks so much. Subscribe, smash the like button. We'll see you next time. Bye for now.